Hello, everyone, and welcome to our tactical portfolio update for August 2025. I'm Michael LeBlanc, Senior Portfolio Manager with LLC Private Wealth at CG Wealth Management, bringing you the latest in the global markets, key sectors, and a focus on Canada's performance, where we look at everything that's going on and what's going on in our tactical portfolios. So with that, let's dive into things. Before we get started, I do want to remind everyone of our new Mike on Money feature starting in September, monthly market mistakes, where we're going to highlight areas of risk that most people may be overlooking or not even aware of out there. And in fact, this month, you should really watch. It's kind of a big area of concern of mine because I think a lot of advisors aren't even aware of the risk there, or they're just starting to become aware of it, and they might have or you might have a lot of exposure to it. Also, make sure you subscribe to our monthly emails. If you haven't done so, reach out to us. We can put you on the list to make sure you're getting it. On there, on those monthly, we give you an update on all our content, including all the updates from our small cap specialist team. And there's a lot of great content coming out of them these days. So let's take a look at the global markets. August delivered a solid performance across all major indexes. The Nasdaq rose by 3.7, S&P gained around 1.9, TSX led the pack at 4.3. Even the MSCI World Index had a respectable 1.3 overall. And we saw some milestones being hit with the S&P 500 hitting above 6,500 for an all-time high. Historically, though, August tends to be a bit more volatile. Since the 90s, early 90s, the VIX, the volatility index that we track the volatility with, has jumped about 8.4%, making August the second worst performing month on average for the S&P. Actually averages a negative return over all those years. But this August obviously defied that trend with the markets rallying steadily, mostly amid easing trade concerns and improving economic fundamentals. Things aren't looking great on the economic side, but we have seen some things improving a little bit, giving us some signals of stability and growth out there. And if we look right into Canada, or specifically into Canada, for August, we saw the S&P, as I mentioned, a nice robust 4.3% gain in August, pushing up a solid start to the year. It's the index started the beginning of August over 27,000 and ended the late August just over 28,000. So continued to see a good performance. Most of that was led by the top Canadian banks posting good earnings, all of them beating expectations and benefiting from a lower loan loss provision and resumed stability as we've seen, interest inflation coming down off of 22, where all the banks were suffering a bit on those fronts. The tactical portfolio itself continues to benefit from our Canadian bank covered call strategy. If you've been following that, it's been kind of one of our main themes, especially for this year. It's certainly the largest position in the portfolios, and it saw a jump of 4.9% in August alone, and that's not even including the current yield of 15% on an annual basis. In fact, the portfolio is highly focused on yield positions this year, and it's been a big strength for 2025. Even the other large position we have in there is the utility covered called strategy, currently yielding just over 17% on an annualized basis. So both those are being, really added to the portfolio, given strength to returns. As you guys know, if you follow our videos, I don't have the portfolio audited returns for the month of August. It takes a couple of days for us to get those out. But you can always go to our website, llcprivatewealth.ca, or a quick link, mikeonmoney.com. And in there, usually within the first week of the month, we have posted our performance sheets, and you can check out the portfolios there. But they continue to do great this year, and really happy with them as those that focus on yield and inflationary positions continue to outperform in there. On the broader markets, when we take a look at what's going on, obviously trade and tariffs are still overhanging everything. U.S. tariffs rose to about 35% on some Canadian goods effective August 1st. And, that was kind of the U.S.'s deadline for a trade deal that never happened. But most of the Canadian exports still remain exempt under the USMCA. And as of August, over 85% of our trade with the US still remain tariff free. So that's been helping. Politically, Prime Minister Mark Carney announced Canada would align its retaliatory measures with the USMCA exemptions, helping ease some of those tensions. So maybe we'll lead into a possible trade deal with the US. Labor and disruptions, August. Obviously, if you were doing any travel through August, we saw the flight attendants with Air Canada go on strike between August 16th and 19th, with a tentative agreement was reached on the 19th. But the strike highlighted, you know, potential volatility in our consumer and business activities as everything kind of ground to a halt. Even the other airlines trying to step in just don't have capacity to cover things off if Air Canada is down, which is why the rationale for the government to step in and put a halt to it. So we'll have to see as that plays out, as they have to ratify the deal. I believe the deadline for them to ratify the deal is September 6th. We're starting to see some grumblings that they're not quite happy exactly with the deal, but we'll have to wait and see how the vote goes. The bond sell-offs continues, and I know this is something we don't talk a ton about out there, but more and more the U.S. government debt is becoming a spotlight as to the strength of the economy and where things are going. The bond sell-off has been continuing with concerns over the government debt outlook, pushing the long-term benchmarks and borrowing costs many countries a bit higher. Uncertainty around the Fed's independence. If you've been following this news and what that means for the interest rate path, is adding a little bit extra jitters for investors. Investors are waiting to see whether Trump's bid to fire Fed Governor Lisa Cook will be ruled legitimate, and when Trump's ally Stephen Moran will join the Fed's board. All that's given more uncertainty and less confidence in the information that we're getting out of the U.S. Fed. All that's impacted the U.S. dollars, continued its negative trend despite some mid-month strength in August. It did trend down again lower at the end of the month. Conversely, we see gold continuing to rise and show strength, currently over 3,600 US as we were recording this video. So just to recap things, August 2025, we saw some strong global gains. Most indexes hitting new highs despite the usual seasonal volatility. TSX certainly outperformed, really driven by the financial sectors. Most of the U.S. was driven by the tech sectors, with NVIDIA posting strong earnings, given what's going on in the trade realm there. So most of that in the U.S. led by those tech sectors. And we saw Google in the first couple of days of September. We saw Google report with some really good numbers, and that kind of bolstered a lot of the U.S. markets. We continue to hold a yield-heavy portfolio and strong cash positions in August. We're still expecting a bit of volatility, and we're keeping a close eye on that inflation creep that can come out of nowhere, especially with the back and forth tariffs. But as of right now, as mentioned, August has maintained quite well when it comes to volatility, especially the seasonal side. Overall, August closed on a high note, some momentum, positive data, and clarity on some of the trade issues, setting the stage for a pretty good end of 2025. As I mentioned, we are expecting some volatility, but should come out of it pretty healthy. So we're looking forward to that. So thanks for watching, everyone. Don't forget to like, subscribe, reach out to us with any questions. Look for that mid-month video that we're going to have for Mike on Money, the monthly market mistakes, and make sure you subscribe to our newsletter or check it out if you're receiving it, because we have made a bunch of updates on that front to give you more information in a timely manner. So with that, until next time, I'm Michael LeBlanc, and this is your Tactical Update. Thank you.